Hello, everybody. My name is Anna. I'm a researcher working on sustainable finance at the European Forest Institute. And through this video, I would like to share with you some of the insights from our research, which looked at how different experts perceive and narrate what sustainable finance means in the context of forests. The reason why we did this research is because we found that there's a lack of academic literature on the topic, and we also wanted to find out how practitioners as well as academic experts understand and interpret the concept to create new field knowledge. That's why we interviewed 51 experts working for financial institutions such as banks and investment management companies, but also timberland and impact investors, international organizations, civil society organizations, and so also experts working in academia in Europe. What we found is that 2/3 of interviewees agreed that there is no common understanding of what sustainable finance means in relation to forests. For us, this indicates that there is potential confusion on the topic itself within the expert community. That's why we decided to identify main narratives to see if there are any common threads and differences. I hope that next time when you interview experts of banks or asset managers claiming to focus on forests, this narrative categorization helps you to point out which perspective they have on the topic. What you can see now here on the screen is a pie chart with 3 main slices colored in red, yellow, and green. Red means that those who were interviewed saw absolutely no connection between sustainable finance and forests. In other words, for these people, private investors do not at all come into the picture when you're talking about forests. In the middle part, those marked in yellow found a slight connection between the two, and green saw a strong link. Also, you can see 3 little icons on the side showing how these experts framed the links between sustainable finance and forests. In particular, whether they saw these links as something positive for private investors, indicated as so-called opportunities, or something rather negative that they need to address, indicated as risks. Let us now start with narrative 1. Experts that use this narrative think that private investment should not go to the forest, because forests are a public good. So from their point of view, it is the public sector, not private ones, who should finance it. The main issue for them is that public forest finance is not sufficient in volume and also not always sustainable. You might have heard of harmful subsidies that are invested in the agriculture sector, causing forest degradation or deforestation. These experts think that private investors are not interested in forests because other environmental asset classes, such as renewable energy, for instance, are more interesting. So from these experts' point of view, what is essential is to reform public finance to be more sustainable. They also think that today there's more than enough talk about private finance and that we should rather concentrate on the public sector to provide strong national and also international forest and environmental regulation. What is interesting is that both experts from the financial sector as well as from the forest sector are using this narrative. They are basically the critical voices towards making a link between private sector investments and forests. In contrast to this, in the yellow slice, you have 2 narratives focusing on the mitigation of risks. For narrative 2, experts are mainly concerned about financial risks, so that there will be too much risks for the financial sector with climate change. You could think of things like fossil fuel investments that are at risk of becoming stranded assets because of oil depletion. This is basically the classical financial sector perspective on sustainable finance, which tries to mitigate financial risks by incorporating social and also environmental so-called externalities, such as climate change, into their risk calculation and for portfolio screening. For the financial sector, to mitigate risks, a common approach when it comes to investing or lending is to exclude companies based on international norms or their own policies to avoid investments into things like weapons, fossil fuels, child labor. What we should be aware of is that forests are only considered for charity here or for offsetting emissions, and there's not yet a strong link for these experts between sustainable finance and forests. That is why this narrative is marked in yellow. Experts that use this narrative want that the public sector provides a legal basis for sustainable finance and a market for emission and carbon trading. On the other hand, narrative 3 considers that direct or indirect investing or lending to agribusiness like beef production and palm oil harvesting exposes financial institutions to deforestation risks. They are concerned about unsustainable finance that destroys forests and believe in the end need to stop harmful lending or investing into very complex commodity supply chains, like those of beef, soy, palm oil, timber. And from their point of view, there are different approaches how to deal with deforestation risks. Firstly, financial institutions need to be aware of their risk exposure and need to come up with corporate deforestation or zero deforestation policies. Exclusion is also used to divest from companies that are violating such standards. Another approach is so-called active ownership, to go into dialogue with companies to improve their performance on deforestation risks. From their perspective, civil society and academia can also help to be a watchdog and to lobby for strong environmental but also financial regulation of the public sector. And I know this narrative sounds the most appealing, but be aware there's only a very limited number of financial institutions that are having such deforestation or zero deforestation policies in place, and together with civil society experts, they are the ones to use this narrative. Finally, let us now look on the green slides that includes two optimistic narratives. They are mainly used by forest sector experts trying to direct private investment into the sector. Experts that are using this narrative think that we need so-called blended finance, so mixing public and private money, to trigger more private investments, especially in the tropics. At the moment, there are governance and economic barriers, and also the forest sector is very complex, and it makes it difficult to motivate private investors to invest into forests. Also, there are only a limited number of good and large-scale projects available. So from these experts' point of view, there are clear roles the public and private sector need to take. Firstly, the public sector needs to mitigate operational risks for the private sector by providing insurances, but also technical assistance, and they also need to contribute to blended finance to kickstart, but also to upscale private sector investments. Secondly, the private sector in return needs to build up operational capacities of financial institutions in developing countries and emerging economies and develop new investment products such as forest bonds. In contrast, in narrative 5, experts are convinced that forests are an attractive asset class already, and that there is a strong future potential to invest in forests because they're generally sustainable, and also they have the possibilities to generate revenues. Also, experts think that we need more cross-sectoral collaboration to overcome knowledge gaps of financial institutions and more awareness for investment opportunities within the sector. The financial sector can support a shift to the forest-based economy framed by public sector regulations. This narrative is mainly used by impact and timberland investors trying to marketize forest investments. So in a nutshell, financial sector experts are mainly taking a risk approach to communicate on the topic, be it financial risks or deforestation risks. And in contrast, forest sector experts are outlining opportunities to make private investments work through so-called blended finance or by marketizing forest as an attractive asset class. In both sectors, there are critics that do not see any relation between private sustainable finance and forests. These were the 5 narratives in brief. There's of course more to it, but for the time being, I hope this gave you some ideas on the existing ones we've identified in our research. And thanks so much for listening, and goodbye to you. Bye-bye.